I will make a very short introduction to this session before handing over to John. So my name is Corinne Podger. I manage programs and education at the Walkley Foundation. We have great pleasure in running this webinar. It's one of two that we've run this year looking at different aspects of business. Earlier this year, we ran a session looking at how do we monetize journalism. And today's session is an expert session led by wonderful trainer Prashant Mehra, looking at the basics of business journalism. It's been incredibly popular, so I won't hold anything up. I want to acknowledge, of course, the wonderful support from Tellem, which is bringing this webinar to you, and I have great pleasure in handing over to John Bergen from Tellem to introduce.
Thanks, Corinne, and hello, everybody. We'll get underway as a few people are just coming through the door. Hi, I'm John. I'm from Tellem Media. Before we begin, I would like to acknowledge that I'm participating in today's webinar from the lands of the Gadigal people of the Eora Nation, and I pay my respects, of course, to elders past, present, and emerging. I'd also like to acknowledge the traditional custodians of the various lands on which you are all working today, and any Aboriginal and Torres Strait Islander people that are participating in today's audience. If you're not familiar with us, Tellem Media, it's all about creating connections. We bring together journalists and communications professionals through our various services, our contact database, events, information services. We cover all of Asia Pacific. In short, we're here to help. And that's why we're thrilled to support today's webinar presented by the Walkley Foundation for Journalism. We've been working with the Walkley Foundation for many, many years. And we just love supporting them because, of course, they are all about celebrating and elevating great Australian journalism and building skills and building capacity within the industry. Today, we're talking about business journalism. Really important topic. It goes without saying because from the companies we work for to the companies we buy from, businesses play a huge, huge role in our everyday lives. They feed us, they clothe us, they provide goods and services, they provide jobs, they contribute to government coffers, of course, and they have significant influence on public policy and social issues. And that's where business journalism comes in, keeps corporations in check. It promotes and fosters transparency. Sometimes it exposes wrongdoing, of course. Perhaps above all, it gives people the information they need to make good decisions about their lives. And more often than not, ordinary people are at a bit of a disadvantage when it comes to accessing and understanding the world of business. It can seem a bit mystifying, if not a bit intimidating. But of course, with the right tools and the right training, any journalist can begin that journey to becoming a business journalist, and they can help bridge that gap, that information gap, and level the playing field. So I'm really, really looking forward to hearing from Prashant today. You couldn't ask for a better teacher. He's going, of course, to explore core business and financial and economic concepts that are going to enhance your reporting abilities, full stop. They're going to help you connect the dots, better understand the forces that shape life and society. So I will be on the call. I'll be furiously taking notes myself because I'm sure I stand to learn a lot, as do everyone else. So thank you for your time, and I'll hand back over to Corinne from the Walkley Foundation, your wonderful host, and of course, onto Prashant as well. Thank you.
I'm so excited that we have Prashant with us. Of course, he's reported on international finance for a whole host of organizations, including Reuters. He is just terrific and came so highly recommended to us as a trainer. I'm not going to take any more of his valuable time. Prashant, if you'd like to share your screen, and I'm handing straight over to you. I'll be keeping an eye on the chat box, guys. So if you have questions, just ignore the Q&A box because it's two boxes for me to monitor. Just use the chat box instead. You can use that to introduce yourself if you like, and you can also post questions there. So over to you, Prashant.
Thank you very much, Corinne. Thank you very much, John. Hi, everyone. My name is Prashant Mehra. I have reported for Reuters for a long time. I have reported for the Australian Associated Press for a long time and a whole host of other media companies. I have been a freelance journalist for the last 4 years, which allows me to work with a whole lot of different media companies. So I am in a bit of a position to be able to share some details, some tips on how we can cover financial news. So I'll get going straight away. What I am going to be covering today, essentially, we're going to divide this into 3 sessions, 3 parts. First, we'll try and understand how stock markets function. We will see how to read financial statements and annual reports. We will try to understand some basic economic indicators like GDP, unemployment, and inflation. In between all of that, we will try to go through some practical examples to see how we can actually apply all this knowledge to getting stories out of these documents. Okay, let's get back to this. So what exactly is financial journalism? Essentially, a lot of people struggle with financial journalism because they think it's about numbers. It's a specialist thing, very difficult to understand. And I completely get that. But basically, financial journalism, deals with money. All of us basically have to use money. We pay interest, we use credit cards, we have loans, inflation affects us. So basically all of us do deal with money all the time. It's always good to improve your financial literacy, and with journalists there's an added advantage that you will also be able to, if you're dealing with money, it's easy for you to understand financial news. Broadly, financial journalism deals with, in specific terms, we're talking about financial markets. So, a lot of us know about the stock market, but that is just one of the financial markets. So there is the bond market, there is the debt market, there are commodity markets, there is the forex market. All of these together make up the financial market. So any news that we report about financial markets, that's included in financial journalism. Macroeconomic data, anything about the economy, economic indicators, which show economic growth, such as GDP or inflation or interest. You might have heard about these things in the last few weeks. Any news about that is part of financial journalism. Fiscal policy, this is basically the financial decisions by the government. So, we're all familiar with budgets, but, even during the rest of the year, the government takes financial decisions. For example, recently, the government decided to change the stage 3 tax cuts. That was part of their fiscal policy. Any reporting around that is part of financial news. Corporate news, basically anything related to a company. So when a company, company results, for example, or a company deciding that it is going to set up operations in another country, or deciding that it wants to take over some other company, mergers and acquisitions, all of that is part of company news. And finally, personal finance, anything to do with the finances of an individual. So things like, for example, where can you find the cheapest mortgage? Or where will you find the cheapest insurance? All those things are part of personal finance. Any reporting around that is all part of financial journalism. So as you can see, all of these things are stuff that affects us in day-to-day life, which is why financial news is so important. And it's also important that everybody understand what financial news is, because it will help you improve your financial literacy, and it will help you take decisions around money. In effect, financial journalism is basically providing information to your readers or your viewers or your listeners, which helps them take a financial decision. Now, would you know who these two people are? Anyone? So on the left is the Reserve Bank of Australia Governor Michelle Bullock. On the right is Federal Treasurer Jim Chalmers. Basically, the two most important people in Australia who affect your financial decisions. Let's move on to stock markets now, which is not the biggest of the financial markets, but it is the most popular because all of us invest in stock markets. Some of us direct in stocks directly through our trading accounts. The rest of us invest in stock markets through our super funds because all of us have super fund accounts, super accounts, and almost all super funds will have an investment in stock markets. So what exactly is the role of a stock market? Firstly, I'm going to ask you, I'm going to explain briefly what exactly is a stock. A stock is basically a unit of ownership in a business. Say, for example, you own a business which is worth $1,000, and it has 1,000 shares worth $1 each. Each of those shares, each of those units of $1 value is a stock, is a share in that business. Basically, what you do is stocks are, we go to a stock exchange. A stock market is basically a place where these shares are traded. You can buy or sell those shares. You can find out the worth of your business. You can raise capital. Now, you can raise money through shares in the stock market. The first time that you raise capital in the stock market, it is called an initial public offering. Subsequently, when a company is already listed in a stock market, it can raise capital again, and that will be a secondary offering. Generally, it is through way of a share placement to institutional shareholders, or it's a rights issue. These are the two ways in which we can raise capital. Now, let's go over this with a practical example. You would have heard of this brand. It's a fast food restaurant chain, and this company listed its shares on the Australian Securities Exchange about a few weeks ago. It was the biggest, it was the biggest initial public offer in the last 3 years. And there was a lot of press for this, basically about the valuation of the company, about what the business is worth, how much those shares would get listed for, and all these things. So basically, Guzmán y Gomez, when they decided that they needed to raise capital for the business, they came to the Australian Securities Exchange. So that is the primary function of a stock market. It is a place where you can raise capital, where you can find investors. When they listed on the stock exchange, the process that they went through was also finding the value of the business. For example, there was a lot of talk before the listing that the stock might be worth let's say $20 a share or $22 a share. When the stock actually listed, it was valued at $30 a share. What had happened in between was that the market assigned a certain value to that business, which was higher than they had initially estimated. And this is based entirely on demand and supply. So basically, if you know there is a lot more demand for this share, for if there is more demand for something and less supply, obviously the price goes up. If there is more supply and less demand, the price will come down. That is exactly how things work with the stock market. A stock market is also the platform where you can buy and sell the shares. So once Guzman y Gomez has listed on the ASX, on an everyday basis, investors can buy shares in the company, or if they own the shares already, they can sell those shares in the company. Stock markets are also generally considered an indicator of health of the economy. So generally, if your stock markets are booming, it is considered that your economy is doing quite well. If, on the other hand, stock markets are, trading low, it probably coincides with the economy being in some sort of a downturn. That is, these are the kind of functions that a stock market will perform. Let's move on to the next slide. Now, what I did was I took a screenshot of some of the news headlines about the Guzman y Gomez IPO. And you can see that, all of these headlines reflect the different functions that a stock market has performed. For example, Motley Fool had something about the share price falling 10% on day 2. So basically, it's price discovery. There is another headline about the 3 billion valuation on listing. There is a headline about the stock soaring on ASX debut. All of these headlines are sort of reflecting all the things that a stock market is to different people. At this point, I just want to point out another thing. If you look at the headlines closely, you will see that they cover, it's the same company, it is the same listing, these are all headlines on the same day, but as you can see, they are completely different in the angle that they use. And that is basically one of the things about financial news. There is no single story. Your story will essentially change depending on your audience. So for example, a stocks investor focused website like Motley Fool will focus on the stock price. A newspaper like an AFR or the West Australian, they will focus on the industry. So, talking about how that company went to the stock market, or what it means for the industry as a whole, that sort of thing. While, an international company like Business Insider is talking about, Asia's answer to Chipotle is now a $1.5 billion public company. So they're making an international comparison.
Prashant, we do just stay with the screen sharing, but we do have a couple of questions. One is, I think when you're talking about it, no, leave the screen, that's fine. Okay. One is relevant to this question around this initial public offering. The question is, how is it determined how many shares are issued for a newly listed company? Who decides?
So that is basically, thank you for the question. That is basically decided by, the advisors to the investment bankers and the advisors to the company which is listing its shares. So they will basically make an estimate of how much that business is worth and what value to assign to it. So, if you go back to the case of Guzmán Gomez,
Yeah.
The investors, the investment bankers assigned a value of $22 a share.
But let's say I have imagine that I have a little company. So let's say I start a company down on Dharawal land where I live. And I want, I don't necessarily have investment bankers or advisors, but I want to get an idea of, I suppose, this question that's been posted in the chat. How would somebody, just a regular business, determine the value overall, and then how many what each share would be worth, which would, I guess, determine the number of shares? How does that process work?
Okay, let's take the example that your business is worth $1,000. Okay.
Excellent.
Okay. Now you need another $1,000 to expand that business. So you need to look for outside investors because you don't have that money. So what you will do is you will convert your business into a company with 1,000 shares of $1 each. Let's assume that's the value that you have assigned to your business. And you go to the market and you ask for another $1,000 at $1 each. Okay. So you, at the end of it, you will own 50% of the business. The outside investors will own the remaining 50% of the business. But there is demand and supply at play. So suppose your company is an AI company, which is, there is a lot of momentum in AI stocks. And so some investors will think, oh, this is a great buy, and they're selling at $1. Actually, there will be a lot of demand for that stock, and they will say, I'm willing to pay $1.50 for this, $1.50. And that is basically, how the valuation of your business happens. When you go into a public market and, you show off your business, the market will assign a certain value to your business. And that is how you will determine the valuation of your business.
Thank you very much. There is another question on this, but I'm mindful that you've got a whole session to deliver. So we'll hang on to that other question until the end. So I'll hand back to you.
Okay, thank you. Right. Let us I talked about the stock market. A stock market in formal terms is called a stock exchange. It is a place where you buy and sell the shares. How a stock trading, the way a stock trading happens on a stock exchange is basically the format is that of a simple auction. You all know exactly what an auction is. Some of you may have been to a property auction even. So basically, there are a number of buyers and there is a seller, and the buyers will put a price on that, put a value on that thing that they want to buy, and because there is competition among the buyers, they will try to bid up the price or bid down the price. The only difference in a stock market is there are thousands of sellers for a stock and there are thousands of buyers for a stock. And basically, the job of a stock exchange is to match these two. When the price that the seller is willing to pay and the price that the buyer is willing to accept matches, you have a trade. Basically, that's how a stock trades. Stock exchanges are the organization which actually make this happen. They are the platform. In Australia, that is the Australian Securities Exchange. but you would have heard of, the New York Stock Exchange, the NASDAQ, Euronext, the Japanese exchange. All of them are stock exchanges. Some of the biggest ones, as of March end, the market value of all the stocks traded on stock exchanges was estimated to be about 110 trillion US dollars. Markets have gone up a bit since then, but I assume it would be about 120 trillion now. You can see on the screen, the US markets probably make up half of that, but there are some, other major markets in Europe and Japan, and, ASX is pretty small compared to other global markets, but it's still significant. Let me look at, we've looked at what is a stock exchange. Let's look at a market index. So what exactly is a market index? A market index is basically a group of stocks which have a common characteristic. So, for example, on the ASX, there is the benchmark market index is the ASX 200, which is basically a group of the 200 biggest companies on the exchange by market value. And, market indexes are useful because they give you a slice of what's happening in the market without, having to look at every single stock that's trading. So for example, these 200 stocks will probably make up about 80% of the value of all stocks on ASX. And so if you look at the ASX 200, you will know whether the market is going up or the market is going down. And, that is an indication for investors on, how the day is trading. So if you want to sell your shares, probably a good day when the markets are going up. If you want to sell, of course, you have to look at the particular price of your share of the company that you own. If the market is going down, probably that's a good day for some investors to buy shares. Market indices are again, these are sort of the brands for which markets are known. You would all have heard of the Dow Jones Industrial Index, the S&P 500, NASDAQ, FTSE 100 of the London Stock Exchange, and Nikkei 225. So basically, for example, FTSE 100 would be the 100 biggest companies by market value on the London Stock Exchange. The Nikkei 225 would be similarly the 225 biggest companies on the Japan exchange. Basically, that serves as a sort of, it tells you, it is one number that you can look at to determine which direction the market is moving.
There's a question here which is, does a public company get automatically added to every stock exchange, or do you choose one to list on, or more than one?
That is an excellent question. Basically, you choose which stock exchange you want to list to. And again, there is a lot of competition between, stock exchanges are businesses themselves, and there is a lot of competition among stock exchanges to attract investors. So, for example, you would, let's say there is a Australian tech company which decides to go for a public listing. That company can list on the ASX because, that will be the easiest. But that company can also go and list on the NASDAQ. And a lot of you would know, take the example of Atlassian. Atlassian is not listed on the ASX, but it is listed on the NASDAQ, even though it is headquartered in Australia. Most of its operations are in Australia. Basically, the reason that happens is because Atlassian says most of our investors, most of our ecosystem is going to be found in the US market. And so it is better that we list there because we will find a better valuation there. And so, there are some companies which can list on more than one stock exchanges. Until recently, mining giant BHP was listed both on the ASX and on the London Stock Exchange. Until, a few months ago, they decided it's not worth putting up with the expense of listing on both stock exchanges. And so now they are only listed on the ASX. So basically, the answer is the company decides on which stock exchange it wants to list.
Thank you.
What are the factors that influence stock prices? Any guesses? Now, this is particularly important for journalists because this will determine where the news is going to happen. There are a few factors. In specific terms, the factors that affect the stock price is, first of all, the company performance. So how the company is performing, whether it makes a profit, whether the profit is growing, whether the profit has fallen, what is the amount of dividends that it is paying, whether it is doing mergers and acquisitions, whether it is taking over other companies. These are the kind of factors which will affect the stock price. So for example, a company announces that its profit has grown 50%. Obviously, the stock price will go up based on that because higher profit means higher valuation. The other thing that would affect is an industry trend. So, for example, commodity prices, or for if you've been paying attention, the price of lithium, which is used for electric vehicles, has been falling over the last 6-8 months. And you can see that because of that, most of the lithium miners in Australia are trading at near their 52-week lows. In most cases, it has nothing to do with what the companies are doing. It is simply an industry-wide trend. Similarly, you will see that any company which is dealing with artificial intelligence is basically on an upward momentum. And it really doesn't matter what those companies are doing at the moment. Basically, there is a lot of demand for artificial intelligence businesses in the market. And so, all of those companies are seeing their share prices go up. Sort of macroeconomic or market-wide decisions can also make a difference on stock prices. For example, take interest rate decisions. Now, all markets across the world have been going up in the past 6 months on the expectation that central banks are going to cut interest rates. When interest rates are cut, the cost of finance for businesses comes down, which is always beneficial. It will result in higher profits. And this is something which is like a global phenomenon. And things like this will make a difference on stock prices. Or you can take the example of global events, and we have the very good example of the pandemic. If somebody was tracking, there was a crash in stock markets worldwide sometime in March 2020 when most countries decided to close travel, and there was basically an impact of that or take the example of the US elections. That is going to affect prices for stocks on which there is an impact, either because they trade with the US or, you know, the new administration could take some decisions which would impact their operations, or when China is not doing well economically, there is an impact on Australian iron ore miners because China is the biggest market. So these are the sort of connections because of which stock prices can get affected. Finally, market sentiment. I mentioned artificial intelligence stocks, and there is an upward momentum in that. And sometimes it is simply, markets and share trading is all about psychology. And sometimes it is simply about sentiment. So, for example, people are bullish on a particular sector because some companies in that sector may have done well, and so they will try and bid up the prices of all companies in that sector. When that is happening, it is market sentiment at play. Similarly, uh, you know uranium prices or lithium prices are on the downturn at the moment, even though some of these companies are doing very well. What is happening is that it's market sentiment at play. These are now one point that I want to make here, especially when we are reporting about the stock market or stock prices for companies, is that you can use the bare numbers, but in financial journalism, context is everything. Let me give you an example. Let me give you a few examples actually. Let us say, if I say the stock price of a company has fallen by 50 cents, it can mean different things. If the stock price of that company is $100 and it has fallen by 50 cents, you won't even pay attention. But if the stock price of that company is $1 and it has fallen 50 cents, then you know that it is a very big deal because it's fallen by 50%, right? Let us take the example of if I say the price of crude oil has risen by $2 a barrel. It can make it $2 a barrel to $81 a barrel. It can, or it may or may not mean anything. But if I tell you the price of crude oil has risen above $80 for the first time in 6 months, that gives you a context. That tells you that it's a really big deal. Similarly, these are the kind of background information that you need to put with the numbers. For example, with international news wires like Reuters and Bloomberg, uh, a lot of customers pay thousands and hundreds of thousands of dollars for their news feed. Even though all of those prices and all of those announcements are available either on the stock exchange websites or on the individual companies' websites. So what are they paying this for? They are paying this for the context and the value addition that a financial journalist can make with financial statements. Now, basically, there are Warren Buffett says accounting is the language of business. And financial statements are all about accounting, so the language of business. There are three main financial statements that we should look at. to figure out the company's business, the balance sheet, the income statement, and the cash flow statement. Today, we are only going to be talking about the balance sheet and the income statement. Let's leave cash flow for another session. And we're going to be talking about annual reports, which I will come to in a little bit. Now, what exactly is a balance sheet? A balance sheet is basically a statement about the financial position of a business on a certain date. So for example, you will have a balance sheet on, let's say, 30th June of a year, or you will have a balance sheet on the 31st of December. So it is what is the position of that business on a certain date, An income statement, on the other hand, is a statement about the performance of that business over a certain period. So you will have an income statement for 6 months, or you will have an income statement for a year. Basically, the differences are, balance sheet, statement of assets and liabilities. Income statement tells you what is the income and the expenses during that period. Balance sheet is as on a particular date. An income statement will be for a certain period, for a 6-month or a period or a year. The purpose of a balance sheet is to measure the financial health of the company. Whether its financial position is strong or weak. The purpose of an income statement is to measure the financial performance of a company. What has it done during that period, whether it has performed well or whether it has performed badly. If you were to take an analogy, an income statement would be you looking at your bank account to see what you have spent money on and what income you have received. Whereas a balance sheet would be, something like taking stock of your super balance as on a certain date, taking stock of your loans on a certain date, taking stock of your bank, trading account or bank account on a certain date. That is the difference between a balance sheet and an income statement. I have taken the example of the biggest company in the Australian market to try and explain to you what are the sections of a balance sheet and an income statement. If you normally, with a balance sheet, you write the assets and the liabilities. Assets are something which a company owns, which has value. Liabilities are something that a company has to pay back, it like a loan. Normally, assets and liabilities are listed in the order of how liquid they are. So the most liquid, which is cash and, as you can see, cash and cash equivalents, then receivables, other financial assets, inventory, stocks. These are all listed first. And then it gradually goes to other things such as, property or plant and equipment or land or building, intangible assets. Basically, assets are of two types, current assets and non-current assets, long-term assets. Current assets is basically anything which can be sold within 1 year, which will be converted to cash within 1 year. So cash or your goods which you're going to sell, receivables that you have to receive against goods that you've already delivered, those sort of things. On the other hand, long-term assets are any assets which are not going to be converted to cash within the next 1 year. Plant and equipment, land and building, investments, these are the kind of assets, long-term assets we're talking about. Current assets plus non-current assets, gives you the total assets. Now, liabilities. It's similar with liabilities. Current liabilities are something that you have to repay within the next 1 year. So this would be, you've taken, you've got creditors, you have to pay them back. You've taken some loans on which interest is due. That interest, those are current assets within the next 1 year. Financial liabilities, taxes, you have to pay taxes within the next year. So, those are the kind of things which are current liabilities. Longer term liabilities are, if you have a let's say a longer term loan, a 3-year loan, which is not repayable within the next 1 year, that will be longer term liabilities. Basically, liabilities are again made up of current liabilities and non-current liabilities. And if you deduct all your liabilities from all your assets, what you are left with is the value, is the net worth of that business. Basically, this is what shareholders own in that business. And this is, you asked me before, how do you value a business? This is one of the ways in which you value the business. This will tell you how much that business is worth at this particular point in time. In this case, this is a half-yearly statement. So on 31st of December, this is the value that BHP's shareholders own after deducting all the liabilities from all their assets. Let's come to the income statement. Income statement, basically, you're looking at how much is your income and how much are your expenses. Income is revenue, that is the sales, in other words. Expenses are all types of expenses. Now, this can be, cost of goods sold, sales and marketing, financial expenses, all sorts of expenses. What you get after that is profit before or after taxation. Profit before taxation is, these are used for different, to gauge the performance on different aspects of it. Once you take out the taxes, you get profit after tax. What we as financial journalists focus on is the profit after taxation, because that is what shareholders will get. You will also, many times you will have information about the dividend in the income statement, or separately. Now, let's go through a quick exercise, a practical example. When we are looking to write a company earnings story, we need to know 3 things, or let's say it's a 3-step process. Firstly, we need 3 numbers: the revenue, which is your income, the profit after tax, and the dividend, because these are the three most important things for investors. Then you'll need to look at normally a company will provide a statement with their results, and this will explain the performance. This is where you will get the context for the numbers. Finally, companies will also provide, generally most companies will provide a forecast or guidance. And this is important. This is an important factor for stock prices, because if they have done well in a particular period, but they are not likely to do as well in the coming months, that stock is going to be affected. Or if the guidance is stronger, that's going to have an impact on the stock price. What I've done is I have taken a practical example. Most of you might know Michael Hill as that jewelry chain. What they did was about a month or 2 months ago, they provided their results. The process to go through what do we look for in those results. Basically, you will go to the ASX website and you will look for Michael Hill. You will type Michael Hill results. You will find those results. What we look for first is the profit after tax, the revenue, and the dividends. And this basically forms the core of your story on that earnings by the company. Then you will look at the accompanying media release or an investor presentation, which will provide you with the reasons for that performance. You can look at the comments from the CEO or the chair of the company, which will, indicate what were the factors that affected, whether there were any challenges for the business. And of course, you will look for any forecasts or guidance for the company. Basically, in Michael Hill's case, what you end up with is something like this. So the company has cut its dividend after a slump in its first half profit. That was basically because of a challenging retail environment and cost of living pressures. So it did not have as many customers walking in through its doors as it expected. And that impacted its earnings, because of which it had to cut its dividend. That is basically, broadly how you go through an earnings story. Let's quickly move on to the next one, because I'm aware we are running a little late.
Just before you do that, I've posted into the chat box, Prashant, the link to the ASX site and the search results for Michael Hill. So that's done. Yeah.
Thank you so much, Corey.
No problems.
Okay. Annual report. We talked about financial statements. Now, an annual report is actually, it's simply put, a yearly report which provides an in-depth financial position of the business. What it includes is the income statement and the balance sheet and the cash flow statement. Of course, these statements don't only come out with an annual report. They are sometimes provided separately as well during results. But the importance of an annual report is that it is the bigger importance, the bigger relevance of an annual report is that it provides a lot of detailed information about the company's activities or strategies. There are 5 sections in an annual report. Basically, you will have the letter or comments from the chair or the CEO, their speech or their version, their on what the company has done during that period. You will have the financial statements, which, as I mentioned, is the income statement, the balance sheet, cash flow, and much more detailed financial statements. There will be a director's report, or what is called a management discussion and analysis. There will be the remuneration report, which is actually part of the director's report, but it is a separate section in itself. And this is what will provide you with, how much money was paid to the key executives of that company. And this is extremely relevant for financial journalists. Finally, there is an auditor's report. With auditor is the independent expert who evaluates the performance of the company and certifies that everything is going well or whether things are not going well. And this is important for investors because this is a sort of independent evaluation of the business, and somebody external to the business is telling you whether it's doing fine or no. where you will find news in annual reports. Now, the one thing that I want to tell you about annual reports is that we've talked about companies and stocks, but it's not just companies which provide annual reports. Almost every type of organization will provide you with an annual report, whether it's your government organizations or your local councils, businesses, sports bodies. Anybody can provide you with annual reports. What I have done is I've taken a look at the Australian Football League annual report. And when I went through the financial statements, these are the kind of numbers that I came up with. So, even non-financial journalists, when you have to write your stories and you're looking for background information, this is the place where you will find all these numbers. So, number of members, the club membership, what was the total attendance for the season, what was the viewership, all these sort of numbers are important you know, these add value when you're writing your stories. And you just need to know where to look for these. And the place to look for these is the annual report. So these are all these numbers I drew up from the financial statements of the AFL annual report. This is another example of, I went through the City of Geelong annual report, and basically, there are a lot of numbers here, things like the population of that council, or what is the situation, what is the progress with the capital works of that council, or what is the growth in the population, uh, how many businesses are in that council. These are all important things which even non-financial journalists will find value in when you're trying to when you're trying to write stories on this. And an annual report is the place where you will find a lot of this detailed information. This is an example of a remuneration report. This is Qantas. This is the Qantas annual report from FY23. Now, you all know that Alan Joyce was the chair of the company, and he left under a cloud. There was a lot of talk about, how much he is getting paid. And this is where all those journalists wrote their stories from, because you can see exactly the breakup that he received for the year. And, $21 million, that is what he was paid. And that information came out from the remuneration report of Qantas. You will almost certainly get stories out of the remuneration report of major companies. Now, we're done with that. Let's look at economic indicators quickly. Basically, economic indicators are anything to do with the economy. The three main indicators that we look for are GDP, which basically tells you whether the economy is growing or not. We look at inflation, and that is very topical at the moment, and we'll come to that. And we look at unemployment numbers. Why are these numbers important? Broadly, they will tell you you can assess the health of the economy based on these numbers. You will be able to, predict how the economy will be doing, or take decisions based on these numbers. For example, if you know that unemployment is rising, then you probably know you shouldn't, you got to hold on to your job. these indicators are also important for policymakers and investors. So governments can, take a decision on whether they need to spend more money on certain things or certain areas. Investors will know whether they need to make an investment in some part of the economy at this point, whether there is going to be growth or no. Where will you now? You will find all these economic indicators on the ABS website. And
I'll put a link to that into the chat box for everybody, Prashant.
We probably don't have time to actually show you that, but you can find that on the ABS website right on the front page. Now, let's look at economic growth, or GDP. Basically, GDP, economic growth, is measured by GDP, which is broadly the total of the value of goods and services produced in an economy. Why is that important? Because it gives you an information about the size of the economy. So let's say Australia, the size of Australia's economy, and it will tell you about the health of that economy. So, if the economy is growing well, the government knows, its policies are on track. Businesses know that they can invest. But if the economy is not doing well, then, governments probably need to increase spending, and businesses will, hold on to their investments and hold off and not make their investments. This is an example of the March quarter GDP figures. Sorry. And you can see that basically you can see the difference in the March. This is the quarterly number. This is the GDP for the quarter, and this is the GDP for the year. And as you can see from the graph, the GDP growth has been slowing gradually. The economy has been slowing down. A big reason for that is that we are at 12-year high interest rates, and that is affecting consumers and businesses alike. And you can see the impact of how GDP is slowing down. We look at inflation, and now this is a word which you would have heard many times over the last few years. Especially over the last few months, there's been a lot of discussion about inflation. Inflation is basically the rate of growth at which prices are increasing. Just to be clear, it's not how much prices are increased. It's not the increase in prices. It's the rate of growth in increase of prices. So for example, if something was worth $10 and it's now $12, your rate of inflation is 20%. In the next quarter, if it goes from $12 to $15, your rate of inflation has increased. Instead, it is $3 is the inflation. It is $3 compared to $2, so your inflation has increased. Inflation is basically, the reason we measure inflation is that we can make out, it basically helps you assess whether the value of your money is getting eroded or it's improving. Basically, inflation can be caused either by increased money supply, or it can be caused by high raw material costs or labor mismatches and supply disruptions, things that we witnessed during the pandemic, and which is why we have so much inflation at the moment. Generally, the inflation is generally a good thing for an economy because it shows that there is a demand. But there needs to be a certain amount of inflation. So the Reserve Bank targets in an inflation between 2 and 3%. At the moment, that inflation is more than 4%, which is why the Reserve Bank is trying to, keep rates at a 12-year high, kind of let prices cool down a bit. And why is that important? Basically, inflation will erode the value of your money. Whatever you buy, you would have noticed that prices have been increasing, and what you paid a certain amount of money for some goods, and now that value is much higher. And the increase in prices is generally always more than the increase in your pay packets. And so that's how you erode the value of the money. That is why, inflation is important for financial news. The last thing that we want to look at is labor market data or unemployment data. Unemployment rate is basically, the rate, the percentage of people who are looking for work. So, for example, Australia has a population of 26 million people, but only about 10 million people are working. That doesn't mean our unemployment rate is 60%. That's because, out of those remaining 16 million people, probably 10 million are retired, another 5 million are children who will not work. But the percentage of population that is of working age is probably 12 million, out of which we have, 10 million working. So basically, the unemployment rate is the number of people in the workforce who are unemployed at a particular point in time. Unemployment rate at the moment is, below 4%. It was 4% in May, and that is generally that is one of the reasons why the interest rate, the RBA is holding on to its interest rates, because when people have jobs and when they have money in the bank, that is when they will spend money. When they spend money, it basically feeds through inflation, and that is basically the sort of connection between unemployment and inflation. Basically, here you can see the monthly change in unemployment, 9,200 people, a decline of 9,200 people in May. That put the unemployment rate at 4%. And as you can see from the chart, the unemployment rate has been falling considerably, and it has stayed low for the last 2 years.
Prashant, thank you so much. I know you've got a couple of exercises here.
Yes.
Thank you so much. Do you want to just talk us through these briefly? We've got a couple of questions.
Yes.
We're just coming up for 15:15, and we'll try and wrap up in about 3 minutes at the most.
Absolutely.
So let's touch on the exercises that you've got here, because I think they're terrific.
Now, these are some practical examples. I mentioned the remuneration report. Macquarie Group CEO was the highest paid executive in Australia in FY23. They have come out with an FY24 annual report recently. So if you could, go through their, find that remuneration report in that annual report and see if you can write a story on, on that CEO pay from this annual report, that would be a good exercise for you to revise what we went through today. There is an announcement we talked about earnings reports. There was a recent announcement by KMD Brands on its sort of a trading update. So if you could go to the ASX website, type in KMD Brands, dig out this announcement, and sort of try to assess how the shares would have reacted to that announcement, you would get a good idea of how to use that earnings report for a financial news story.
Wonderful. Thank you so much. Now, are you happy? I know we won't get through all of the questions. Are you happy for folks to contact you if they do have questions?
Absolutely. You can get in touch with me on my email, or you can look me up on LinkedIn, and you can send through your questions, and I'll be happy to respond.
Fantastic. I've just popped your email into the chat box, which will only be visible to the folks who are still on the call. What I might do for the purposes of the recording is to sort of round this off, and then for those who want to stick around for a little bit longer, we can. So, dear friends, thank you so much to Prashant Mehra for this wonderful session on business basics, understanding the basics of business journalism. Prashant, thanks so much. And John Bergen, thanks so much to Tellem for sponsoring it.
Absolute pleasure. Thanks, Prashant. That was fantastic.
Thank you, Corinne. Thank you, John. Appreciate it.